loaded, most certainly. Yeah, I get it loaded. Just ride the way. If you ride the way, shawty ride the way.
What's going on, gang? It is Solo E in the building, and in this video I'm actually going to give you a solid 5-minute scalping strategy, and this strategy right here should be able to literally take out and eliminate all these other strategies that you either use for indicators. If you use anything else, you can just strictly use this, and this doesn't matter if you have been trading for literally 5 days to almost 5 years. This definitely still applies. Now, the reason why this applies and it works very faithfully is because this is based off of price action and market structure. We're not using any indicators. We're not going to be establishing anything but just structure and price action. What we will be focusing on is first looking at where price is at, for one, and then two, we need to focus on the structure. So what I mean by structure, guys, structure is where you have your lows and your highs. So let's say that you're looking at a 5-minute chart right now, and we are looking to see what market is doing. Is it going sideways? Is it going down? Or is it going up? What we essentially always do is figure out our support and our resistance levels. So typically what they say for resistance or support, it has to hit that same area twice in order for that to be called what we call support or resistance. Now, supply, demand, and major highs, major lows, key levels, support, and all of that kind of goes hand in hand once you understand just basic structure. So what we're looking at right now is we see that this whole entire area here is what we call our lowest point. Now, the reason on why I don't go too far out is because we only are scalping, guys, and as a scalper you have to think about in and out of trades, in and out of trades, in and out of trades. That's how my concept is. Every time I get in a trade, I get in and out, in and out, in and out. So since we now focusing inside this whole moment, what we're going to do is just mark out our previous lows and then our previous highs. I know a lot of you guys probably look at the market already like this and probably consider yourself as a zone trader where you are taking buys off of the support or taking sales off the resistance. Well, we're going to kind of switch it up a little bit because I'm going to be applying what we call impulsive waves, and I'm going to be applying what we call corrective waves. Now, this is the very similarity thing of a breakout retest strategy, but a lot of people don't even take this into considerations. Why? I'm not 100% sure, but to be truthful with you guys, this is how I trade. I just do it differently using Elliott wave terms, and I kind of have my eyes trained differently on how to look for it. So since we are what we call in consolidation, we are going to wait for this to break out. Now, before I actually go on and show you guys the way we're going to enter it, try to also see if you can find a bigger picture. Now, the only way you will really be able to master this is really just keep rewatching this video and save this video. But if you look left, you see all of this right here. This whole entire move going down is what we call an official downtrend. Now, how can I tell that is a downtrend? If you use moving averages, that's perfectly fine. But another great way is if you just notice that it's breaking the lows, it's breaking the lows, it's breaking the lows, it's breaking the lows. This is going to be what we call your impulsive wave to the downside downtrend. So now that I established that, this is what we now look at as far as Elliott wave terms. A lot of you guys hear me say ABC patterns. Essentially what an ABC pattern is one big zigzag. What one big zigzag is basically you have 5 waves inside of the A leg, three waves inside of the B leg, and then another set of 5 waves that's supposed to be inside of the C leg. Now, I really want to make sure you guys are still watching this, because if you are, congrats, because I'm really going to get into detail on understanding this, because a lot of people don't understand this and they don't realize that this is how I trade. Now, I'm sorry that I'm getting off topic a little bit, but I really want y'all to understand one thing. For those that's following me now, make sure you subscribe. I've been trading like this probably for the past year now, and it's been very, very successful. I mean, one of the biggest flips that I will post right here is I did 50K in literally about 3 to 4 days. Now, I know that sounds like, damn, you was over leveraging your account and you was going crazy with the risk. Yes, I was going crazy with the risk, but I understood my strategy, I understood my plan, I understood my risk management, I understood everything. So everything clicked. So right when I got to understanding things, all I needed was a simple strategy to stick consistently with, and that was this. So a lot of people don't realize, but when I call out a lot of signals or I teach a lot of students, this is how you can literally catch almost essentially every single move in the market as long as you understand. Literally have what we call this zigzag. Now, I am going to take out the Fibonacci. Now, if you guys don't have the Fib settings, I am actually going to place it here, and you guys can simply just copy this. All you got to do is pause the video and you'll be able to get this. Now that you have it, all we're going to do is this. Once we establish that down or uptrend, we're going to start it, the fibs from the beginning of the trend to the end of the trend. Now, wherever I see my two levels, which are my other two fib points, which are these two golden levels, I call my -27, my -618, I am simply looking on market to hit this area. But here's the problem. A lot of people would rather buy or sell now and not understanding when to sell. I think the biggest thing that we need to really focus on is when to enter. We don't want to enter too early, nor we don't want to enter too late. So instead of us entering just randomly here, because we already see that this is all what we call consolidation, looking for a continuation pattern to go head down, we're going to wait on market to break out. Now, I really want you guys to understand this. In every corrective pattern, you will essentially have 3 to 5 legs inside of that. And what I mean by that is, if we look down here, we have what we call a range, and we know this market has did this impulsive move. What is going to happen is that very first pullback is what we call leg 1. After leg 1 is complete, leg 2. And then after leg 2 is complete, leg 3. And then usually leg 3 is when it will actually break the trend line. But sometimes this happens where market will continue to still react inside of this consolidation area. So if that happens, what will end up happening is that it will complete leg 4, and then they'll do that final leg 5, and then from leg 5 we should now expect market to head up. This is literally how I look at market non-stop, and this is how I can either come in as an aggressive entry, or I can come in as an, I would say, normal entry, where I would rather wait on it to break out of my previous high, like my correctional high, and then I'll wait on that pullback, and then I'll enter off there. Reason why I prefer this method over anything is because you fully know now this is the end of this consolidation. Now I can expect market to continue to go in that direction it's supposed to. Like I said before, you have 5 waves inside of an uptrend. You have 5 waves inside of the downtrend. So if you are looking at this and you already understand the Elliott wave momentum and the Elliott wave move by using the extension tool, Fib extension tool, you can essentially almost now know that this is not the end of this uptrend. So I shouldn't be scared. I should be fine. That is what we basically will be focusing on for our entries. Before we continue, I want to talk to you about today's sponsor, which of course is Margex. Margex is your reliable way to trade Bitcoin up to 100x. If you guys are in crypto trading like Ethereum, Bitcoin, Ripple, you are actually able to put money in your account and leverage trade using Margex. Now, when you come into their website, you will see how simple it is to make money. If you were to do a $100 account, how much you can grow your account up to 100x. If you had a $1,000 account, how much you can grow your account up to 100x. It's very simple. Now, when you guys decide to sign up, it literally takes about 5 minutes to get the whole process going. But once you are in, you are able to come in the platform and start trading right away. Now, inside the platform, they actually have everything integrated in there for you, such for my people that love TradingView to do their markups and true analysis. As me personally, you are actually able to use TradingView on Margex, and you don't have to worry about going to the website and then going to even a different broker to place the trade. Like I said, everything is integrated in here. So let's say that you think the market is going to go down for crypto, you can simply go ahead and sell the market and still make money. If you believe it's going to go up, obviously you could buy it and still, of course, make money. Another nice thing I like about it is that you can easily come over here on your left and change your leverage within seconds. So if you feel like you want to do 80k leverage, you can definitely do it. If you feel like you want to go 100k for the next trade, you can definitely do it. Now, when you guys come in, it's very simple to deposit money. Make sure you are using the code SOLO15 so you can get 15% on your sign-on bonus when you decide to deposit $300 or more. Once again, if you do not have a third-party crypto wallet, you can actually come in this platform and personally use your debit or your credit card to go ahead and start buying these cryptos, and then right when you have the crypto, it'll automatically get added to your wallet, and like I said, you can immediately start trading right away. Now, when you guys are looking to withdraw, you can simply come in the withdraw section and you can withdraw money to your Bitcoin, Ethereum, USDC, USDT, whatever feels comfortable. In my opinion, I'd rather do USDC or USDT, as I find these two actually have very low fees when you are trying to do transactions. But once you guys sign up, you are actually able to refer people if you ever want to refer people. Like I said, guys, it's a very quick process. So make sure you use that code, the link down below. Let's go ahead and get back to this video. All right, so here we have it. Now, our very first move to the upside, which is here. This is what we call leg one, because this all right here was impulsive. So this is what we call leg one. This is leg two. Now, since this is leg two, I am looking for leg three. Now, here's another secret. If you guys understand exactly what I'm breaking down now, this is how effective this works, because it does not matter what time frame you are on, because I know somebody will ask me this and still will ask me this. It does not matter what time frame you're on, you will always see these type of reactions. It's a simple market structure reaction where you get a new high or a new low, and then after that you get the market to exhaust itself. In that exhaustion, you have what we call legs. Inside of that is what we call a corrective wave. So once that corrective wave is completed, you should expect market to now continue back into favor. It's just like if you were running, you're getting exhausted, you're going to catch your time, catch your breath, wait it out for a little bit, and then you get back and start picking up that pace. That's exactly what market does 24/7. So if you guys notice that we should have at least 3 to 5 waves or 3 to 5 legs inside of a corrective pattern. We have leg one here, then we have leg two here, and we should get leg three here. Well, guys, if you look closely, you see that we actually have another impulsive move inside of this correction, and then all this right here is correction. Correction, like what I said, is just what we call exhaustion. It's correcting itself to continue back where it's supposed to go. So we can almost essentially say that we can get in a market after it breaks out of this trend if it does. Now, as an aggressive trader, your move would be the same exact thing as if you're looking to take an aggressive move here. Let's say if I put it a buy limit order or sell limit order right here, because I'm expecting it to do 1 leg, 2 leg, and 3 legs, I will. But then now, if I wanted to get in a buy inside of this corrector and I'm still on a 5-minute time frame, I absolutely can. I can easily come in a buy here because I noticed that this is corrective and this is impulsive, and we should expect it to come here. Now, like I said, guys, you use your fibs to figure out when these moves will end to reverse again. So if I was to draw my fibs from this area to this area here, I can essentially be like, wow, my negative 27 is already aligning with this previous correctional high, so this will make sense for me to buy if market breaks this trend to the upside. And if so, we could potentially look for that opportunity. Now, if it doesn't, then it might just head down, and then if it does, we are going to wait on market to simply retest. So as you guys see, immediately we shot up. Now, is that a bad thing? No, that's not a bad thing at all. Typically what happens is market will pull back and then correct itself and then hit that impulsive wave. But we're on a 5 minutes, so we already like really stretching our reaches for this scalping. But simply, if there was, I see there's a little wick here, if we were to hit on a 1 minute time frame and wait on that little pullback, that would have been your entry. And then, like I said, all you need to do is draw your fills from here to here, and you can almost figure out like these two from basically, guys, from the 2 Fibonacci points. This is where I'm expecting what I call a dead zone level. A dead zone level is where I'm expecting market to kind of react and then pull the other way. So now that I understand that this is the overall bias for this little trend here, now I'm expecting market to be a seller's market. Now, once again, if you are an aggressive entry like myself, you will look for sales, but you don't just sell it just because it had hit this support or this resistance level. You want to wait on price to tell you to sell. So what we're going to do is wait on some more seller momentum before we get in. Now, I see that we got a straight move going down, and it is what it is. Now, something like this, I completely ignore, because my whole setup is I want to see more bears. I want to see more bears taking over, giving me like a double top, giving me some confirmation that it broke a minor low. Let's say that we noticed this on a 1 minute. This was the previous low and it broke through that. I would then look for the sell. So, honestly, I didn't really see much of that, and it is what it is. Now, here's another reason on why we should always wait before we enter for a sell. Let's say that you notice that market's going down and you took a sell here. The reason on why I don't really like to trade just to break out is because sometimes, like I said, market will sometimes either do 3 legs to 5 legs, and sometimes it might come back up to do 4th, and then this will be the 5th, and then it'll come shoot down. So it's kind of like I want to see really what the whole story is before we get in the actual market. So that's what we're going to do. We're going to wait on the breakout, and then now that we got the breakout, we can essentially wait on it to pull back. Now, seeing that it already smashed our TP from this 1, 2, and 3, we could easily simply say, all right, should we wait on a bigger correction or should we get in a market again? Now, when market decides to pull back, it will usually pull back in the second to last lower high, like the second to last lower highs. And what I mean by that is if we come down, let's say we create this lower high here, we create a final lower high here, market will either hit here or hit here before it goes right back down. Now, I'm gonna give you guys another little secret to this. Let's say that we know this market pulled back and then it created a correction. This correction right here, if you guys use your Fibonacci, this correction right here will give you the pinpoint and exactly which lower high or structure level it will react to if you align these two Fib points here. So now, as you guys see, market is doing what it's supposed to do, and then now it looks like we pretty much have a pattern here. So let's say that we wanted to get in the market for a short, and we could have typically got in around here. And then what I am actually going to do is, now the question may be, well, E, because if you guys actually look at this, this could be a corrective. I'm just drawing this out just to show you ideally what it could be, but I don't go off what I think. I always go off what I see. But what I'm basically trying to tell you guys is that when I am trying to ride a trade, like I say, I don't know if it's done with this corrective wave yet. So if I'm coming in aggressively, I always have my very first TP from like around the previous low. And then if I feel confident or not confident, but have more confluences in this trade, then I will continue to ride the trade further on. But typically when I'm scalping, guys, the scalp moves, I'm doing double the lot size. I'm already up $800 on the move around TP1. So I just usually cash out there. Cause like as a scalper, you can get in, get out within like about an hour. You can take almost like 5 to 10 moves within a day if you ever feel confident or comfortable in doing that. So let's say that we did that, and as you guys see, we smashed that TP. Now since we smashed that, my question may be, well, shoot, I don't know if market is going to do a leg 1, because this going up is leg 1, this is leg 2, this is leg 3, this is leg 4. I don't know if it's going to do a leg 5. Only way we will truly know if it's going to do a leg 5 is if it truly breaks out of this area and retests it. So let's see what happens. So as you see, market is slowly creeping back up. And then now that it's creeping back up, we are now seeing a sudden shift in the market. And as you see, market is still going up. Now, since market went up, this trend line that you drew, now, since drawing this trend line, does this mean that this is wrong? No, it just means it's just a different pattern. So if we pay close attention, this is essentially almost the pattern that we have here, which I'll draw it out a little bit better. We have our line and then our line down here. So we can now essentially look at it like this. So like I said, if you guys are coming in aggressively, you absolutely can, but just keep in mind when you come in aggressively, your risk is a lot higher. I would rather just say y'all should wait on market to break to the downside before you get in, because technically if we were to get in here, we would have got stopped out because my stop loss would have been right there, and then now market would be heading potentially down. So we're just going to wait to see if we can get another breakout, and as you see, we did. So as let's get another breakout, this is now where we can come in the market again. We want to look for, like I said, some engulfing candles to go ahead and sell, and then from there we should be able to take this trade either to this low, or you can ride it to that next Fibonacci point. Now since we already had hit this Fib point here, I'm kindly going to wait to see what happens, because even so that had happened, like I mentioned earlier, we had this bigger move and then this bigger correction and then now a continuation. We actually got the exact same thing, a bigger move to the downside, bigger correction, looking for another continuation. And that's literally how market moves 24/7. So like I said, guys, you really want to make sure you analyze this the correct way, because you don't want to miss out on anything when it comes to trading. Make sure you guys rewatch this video if you need to understand it. Rewatch it, and then if you guys ever want to get into with anything else, make sure you follow me on Instagram as well, The Real Solo E. That is my only Instagram. There's no other Instagrams. There's a lot of Instagrams being made. That is not me. Just follow me, The Real Solo E, and I'll respond to anything you guys say, man. Appreciate the love, support. See you guys next video. Peace.